It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey everybody, it's Tyrone Jackson and welcome back to another episode of Trading Stocks Made Easy. Today, there are two stocks that I want to talk about because sometimes trading and investing in the stock market, well, it requires truly a financial education to be able to understand what stock makes a good trade and what stock makes a good investment. Now, one of the stocks that I really like right now that I do think is going to go higher over time is the Walt Disney Company, ticker symbol DIS. Now, this has been a company that has adapted in the stock market over the last 75 years. Disney is not one of these companies that sits around for a while and then tries to figure out how they're going to make money in the future. They're always looking towards the future and to great opportunities. So I'm just going to take you a little bit back in time in the history of Walt Disney. We know Walt Disney, the human being, was really an animator and an editor. And he came up with these ideas about characters that he wanted to create that were wholesome, funny, and entertaining. And that's how we got characters like Mickey Mouse, Donald Duck, Goofy, Minnie Mouse, etc., etc. And then he came up with the idea, because he was also what's known as a visionary, of putting these characters that were inside of his head into full-length motion pictures. But how do you do that? Well, Disney investigated the technology that existed for the day and learned how to do that. And Walt Disney Motion Pictures were born. Now, in the movie business, it's all about ticket sales. How many people would go to the theater to watch your film in exhibition? And so the movie theaters really didn't make a lot of money off of selling tickets. As some of you know, they made their money off of concessions. So the joke in the movie business is, I went to a candy store and I watched a movie. Why? Because the ticket sales went back to the studio that created the movie, and the movie theater made money off of popcorn, licorice, soft drinks, etc., etc. Walt Disney really had his game tight, and he realized, wow, what if I had multiple characters in multiple movies? The more movies I put out, presumably the more money I would make in ticket sales, because the audience would fall in love with my cast of characters that I created. Well, Walt Disney was such a visionary, he not only thought about movies, he also thought about television. And what would happen if there were a series of movies or programs created by the Walt Disney Company that would air on television at a specific time? But you see, Walt Disney at that time needed a partner because although he was in the movie business, he was not in the television business. So he partnered with who? The ABC television network, and they would make made-for-TV movies that were branded with the Walt Disney name. And as we all know, somewhere in there came these wonderful theme parks. Now, if you think about it, Walt Disney was the first person to really brand characters with a theme park, right? So when you went to the theme park, you immediately got to meet the characters up close in person, and he created this whole world. So how did Walt Disney make hundreds of millions of dollars? Not only from the motion picture business, but also licensing their movies to the ABC television network and from the theme park business. Now, if you really think about the theme park business, not only is it are people paying for the interest to the theme park, what's happening to all of that real estate? You see, Disneyland and Disney World is nothing but a giant real estate play. And then they realized if we owned 80% of the hotels that surrounded our theme parks, we'd have another revenue stream. So if you think about the Walt Disney Company, it's made up of what? Television, film, real estate, ticket sales. Well, if you can convince the audience or multiple generations to come to your theme parks and stay in your hotels, you're going to make billions of dollars. Now, in the last 2 decades, they added cruises, right? And then they added the purchase of radio and TV stations. Now, about 30 years ago, Walt Disney purchased the ABC television network. Why? Not only because it allowed them to have a direct pipeline to TV, but it also allowed them television and radio advertising for free. So in the stock market, you know how I'm always telling you your wealth is in your thinking, meaning your money is really in your money beliefs? Well, Walt Disney was such a huge visionary that he was able to create billions and billions and billions of dollars by marrying real estate with theme parks, television, and radio. Now, when the Walt Disney Company purchased the ABC television network, they also purchased hundreds of ABC radio stations and other properties like ESPN, for example. Okay, clearly, this is a company that adapts very well over time. Now, what have we seen? And see, this all has something to do with the stock. That's why you hear me say, don't buy the stock if you don't understand the story. Listen to the story that I'm telling you, because this story generates millions. Well, today, in today's terms, it generates billions and billions of dollars. So all of a sudden, the marketplace starts to shift from live movies and entertainment to something called streaming, right? Streaming is a brand new way to deliver content to the customer via the internet, Wi-Fi, etc. Although the Walt Disney Company did not see streaming services coming, they got an offer from a company called Netflix to lease the Walt Disney catalog. So think about it. If you have hundreds and hundreds of movies and television shows and specials, and it's sitting in a vault somewhere, and someone says, hey, we'll pay you $3.2 billion a year to utilize your content on our streaming service, your answer should be yes. Why? Well, in theory, all of that movie and television content was gathering dust and making no money. And then Netflix said to the Walt Disney Company, hey, do you want this $3.2 billion for 3 years? And then your content would be found on Netflix. And Disney thought it over, and they went to their board of directors and they said, it's a free $3.2 billion. We'll take it. But what happened next was amazing. Several other streaming platforms were developing, and Disney suddenly realized what would happen if we had our own streaming platform. Would we be able to sell subscriptions to subscribers who love the Walt Disney content around the world? And instead of leasing our catalog, we would be able to control it plus produce new shows. Great. And all this smart decision-making led Walt Disney to say to Netflix, we're going to cut the cord from you, and we're going to start our own streaming service. Now, sometimes when I tell you a story, I get a little embellishment in, right? And it was almost as if Netflix went, wait, but we don't want you to compete with us. Why don't you just take the next round of $3.2 billion? And they said, no, we think we could raise prices and do even better. And shareholders would love it if we launch our own service. So Netflix said, so you're not going to take the content deal with us? And they said, no, thank you. And what did the Walt Disney Company do? It took its $3.2 billion paycheck from Netflix. And how much did it cost them to start Disney Plus? $3.2 billion. Well, all of this transaction and forward thinking in vision has resulted today in just 2 short years of Disney Plus having 100 million subscribers who pay exclusively for their content. Now, let's think about this from a stock market investing point of view. What happens to the price of staying in a hotel per night over time? It goes up. What happens to ticket sales to Disney World and Disneyland? It goes up. What does that do? That's called top-line revenue growth. And shareholders love companies where the revenue keeps rising. Disney happens to also be a member of the Dow Jones Industrial Average, and this is one of the reasons that I like it so much, not so much as a trade, but as a long-term investment. Now, let me point something out to you. When I tell you I like a stock, does that mean you have to run out and buy it right now? No. If you don't like that story, and if you're not inclined to purchase a company that is in all areas of entertainment, then that story is not for you. But I happen to like that story. So, am I a Disney shareholder? Yes. Do I think Disney stock is going higher from here? The answer is yes. Why? Because theme park entry fees, movie tickets, and streaming service prices tend to rise over time, which means Disney's going to make billions and billions of dollars from these increases in prices. Well, you know I like Disney stock. There's another company that I really like, but I think it deserves its own segment on the show. And I'll tell you something about that story right after you take a listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Here's one of the things that I've learned. Most people aren't inherently good stock pickers. So do yourself a favor, start your subscription right now at WI Trade School. Not only can you send me your trading questions every single week, but you can do what? Follow all of the stocks that I like. We call them dates in the Wealthy Investor Program. All of the stocks that I date and all of the stocks that I think we should be breaking up with. It'll help you in your trading make better choices. Now, right before the break, we were talking about the story behind the Walt Disney Company. Now, if we know that Walt Disney and Netflix had a partnership, we refer to that in the Wealthy Investor Program as a co-relationship, then the rest of the show should be on the other side of the transaction, Netflix. Now, the Netflix story is compelling. Now, remember way back when there used to be like a Blockbuster video and you used to rent your videos and you have to rewind them and you paid a membership fee to do that. And if your videos were late, you had to pay an additional fee. Well, Reed Hastings, now CEO of Netflix, had the same experience. And he found that he was tired of paying late fees. He says, why doesn't somebody just send you a DVD in the mail? You can hold it for as long as you'd like. And if you don't send it back within a period of time, we just charge your credit card. And remember, that's when Netflix was born. I know it seems like 35 years ago, but it really wasn't that long. So Netflix used to send you DVDs. You could watch them and you'd mail them back. They realized rather than sending out DVDs, what if we just sold you an online membership where you could watch all of their content for one price, anywhere in the world? Thus, streaming became a permanent form of revenue for them. So after they lost the Disney deal, they realized that whole catalog is going to go. We are going to do what? We have to really rack up on original content so we would never have to pay another movie studio all of their money for licensing fees. So now they own their content. Well, this is the thing that's really interesting. 5 years ago, Netflix stock was trading around $90 a share. Today, it's over $500 per share. So $90,000 invested in Netflix stock is now worth over $500,000. In other words, Netflix stock, if you bought it at the right time, could have made you rich. Or richer if you had been in the stock market and you saw the signs. What I have learned is most people don't see the signs. They don't understand what's going on in the industry. Therefore, they don't know when to buy, hold, or sell the shares. That's where I come in. I want you to learn how to make smart choices in the stock market, not just make a lot of money, but learn how the markets work and how stories evolve. Did Netflix start out as a streaming service? No. But as the technology grew and grew and grew, that became the primary way in which their brand makes money. So here's something I want you to remember. Never buy the stock if you don't understand the story. You're wasting and risking your money on a story you just don't understand. Now, back to Netflix. If Netflix shares have gone from $90 to over $500, doesn't that mean that this could be the good time to pick up Netflix stock? No, not because of the price. It's because of the story. So I'm going to tell you a story here that relates specifically to Netflix share ownership. And if you own shares, listen to me very, very carefully. Netflix, in its last quarterly report, which just came out, earned $7.1 billion in the quarter in subscription fees. We know they have over 200 million subscribers, twice the size of Disney. But the rate of their subscriber growth is slowing. And of the 200 million subscribers, only 67 million are in the United States. So what is that telling you? That's telling you that most of Netflix subscribers are outside of the United States, are worldwide. Well, unless those subscriber numbers continue to grow, where is Netflix going to find the next $10 billion per quarter? I don't know, because they haven't told us that. But we know they have over 200 million subscribers, and no streaming company has ever gotten over 300 million subscribers because streaming is so new. So what does this mean? It means now is probably not the time to purchase Netflix shares until we find out from the company where the subscriber growth is going to come from or what is the next revenue stream. You see, don't buy the stock if you don't understand the story. If the story is not clear to you, never buy shares in a company just because you recognize the name. You could be wasting your investment dollars. This is why your financial education is so important. So what am I telling you in this episode? In this episode, I'm telling you I think Disney shares will go higher. Why? They have 100 million subscribers, lots of running room, and they're going to keep adding new content created just from them. Netflix, a company that I like, and I made a lot of money trading, but that day could be over. The only way we're going to know is after the next quarterly report, which is about 12 weeks away. So these are the kind of things when you're buying stocks directly that you must consider. But you can't consider whether you should own shares if you don't know what you're doing in the stock market, if you don't have a financial education, and you don't understand the story. That's why getting that financial education is so important. Now, I'll tell you, there are about 30 companies on my radar right now where I think the stocks are going to go higher, and a few of them are even going to see explosive growth over the next 5 years. It's your job to get to know those 30 companies. I don't even mind if you disagree with me on 10 of them, but at least you know the full scope of those 30 companies and their potential based not only on their top line revenue growth, but on their stories. Do yourself a favor, get that financial education. It's not enough these days to simply have an online trading account. You have to have the education to match. Now, I hope you understand how important the story is, because that's what today's show was all about. Hey, this is Tyrone Jackson, the Wealthy Investor, saying I'll see you next week right here on Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button, and you'll automatically receive our next episode.